Hi, this is Nilus Mattive for Money Markets TV. As everyone knows by now, Europe's economy has all sorts of problems, and its markets have gotten hammered recently. Since I'm going to be traveling to Italy with my family soon, I started wondering whether there are any bargains among European dividend stocks. In order to screen out the losers, I limited my search to stocks meeting 4 criteria. An annual yield of 1% or better to make sure they're paying a legitimate dividend and not just a token amount. A dividend payout ratio of 70% or less to make sure the payments are well supported by money coming in the door. A price to earnings ratio of 25 or less, which ensures that its pricing is at least reasonable. And long-term debt as a percentage of capital below 60%. This is one of my favorite ways to judge whether a company is too highly leveraged. I also only considered companies that trade on US exchanges so that there are no additional hurdles to buying or selling. Now, let me be clear that I'm not recommending any of these stocks to my Income Superstar subscribers. They're just 5 interesting candidates that may require a closer look. Number 1 is Accenture. This is an Irish company formerly known as Andersen Consulting. It does everything from management consulting to outsourcing to technology, and it boasts an impressive list of clients around the world, from Fortune 1000 companies to governments. Despite the global slowdown, Accenture's revenues have been growing at a steady clip, and profits have also been very solid. Going forward, these gains should slow a bit, but the company has a very healthy balance sheet with nearly $5.3 billion on hand and practically no debt. Plus, its dividend is worth more than 2% a year. Stock number 2 on my list is Diageo. It's one of the biggest makers of alcoholic beverages in the world, with names like Smirnoff, Johnnie Walker, and Guinness under its umbrella. I'm a sucker for consumer staples companies like this because their products are always in high demand, regardless of economic conditions. Its sales have been steadily rising, and profits are expected to continue to grow next year. Its dividend is worth about 3.5% every year, and I consider it very secure. Just remember that Diageo is headquartered in the UK, so US investors have to take into account the health of the British pound against the dollar before going forward. Stock number 3 is LM Ericsson, the Swedish phone maker. Its products sell to every corner of the globe, including 25% in North America, and it still has good financials, despite a slight dip recently. The dividend? A healthy 3.3%. Up next is Royal Dutch Shell, which does everything from oil refining to natural gas, oil sands, and even chemicals. Its earnings have rebounded sharply in the last couple years, its balance sheet is rock solid, and the dividend is good for a very nice 4.6% a year. Shell stock has pulled back a bit lately along with oil prices, and it could bounce around amid fears about a new global recession. But if the stock does go lower, that would make it look even more attractive. And finally, we have SAP, the German software firm that specializes in business applications like accounting and general management. Obviously, SAP's prospects are largely dependent on the health of the world's companies. But the good news is that the firm already has a leadership position, and most businesses will at least decide to continue maintaining and upgrading their existing services no matter which way the winds blow. Also, in a strange way, as companies look to cut costs in a difficult environment, they often rely on products like the ones SAP produces to help them maximize efficiency. SAP's annual dividend rate of 1.2% isn't huge, but I believe payments could rise in the future. However, like the rest of the companies I profiled today, SAP does carry the double-edged sword of foreign currency exposure. But at the very least, European dividend stocks like these are well worth investigating further. Because as I'm often reminded during my travels, you never know what treasures await you along the less followed paths. I'm Nilus Mattive for Money and Markets TV. Thanks for watching.